Welcome to the Capital News. I'm your host, Alex Karitis. Today is Sunday, March 22nd, 2020. Thank you so much for joining me. Title of today's podcast is Representation and Recourse. The bulk of this podcast is going to be me taking the time to read another letter that I will be sending to my senators and to my congressmen. It will be posted as well on the Capital News website at thecapitalnews.com, thecapitalnews.com, of course, capital with a K. You have my permission, should you agree with this statement, to use it, to sign off on it as well. If you want to amend it, make it your own, be my guest. If I've simply provided you with a framework, a foundational structure in which to build upon, be my guest. Sign off on it, send it to your respective senators and congressmen. Please do so. Feel free to sign my name to it if it is what I am giving. You come up with your own, that's your business. But if you're going to simply send mine, well, it's mine. So if you want to tag my name along, I'm from the state of Pennsylvania, go ahead and say it. All right? So we're going to get to that. We're going to talk about some of the markets because, of course, we have Asia trading right now at the time of this podcast. We also have U.S. futures hitting limit down once again. Of course, the headline BS is because of the coronavirus scare and because the United States Senate was unable to pass a $2 trillion stimulus package. Well, it's just a matter of time before it does pass. Of course, it's political bickering back and forth, but it might be justified. I mean, the whole thing should not take place. And of course, that is what a lot of the letter that I'm about to read to you is going to describe. But a lot of this has to deal with Democrats not liking the fact that there is something within this bill, this stimulus package, that says about $500 billion of it is just going to go to the White House, and the administration will get to decipher and determine who it gets to go to. Okay? So the Democrats don't like that. I don't blame them. I don't like it either. I don't like any of it. We're against all bailouts. No bailouts. None. So we have U.S. stock futures hitting limit down, which is becoming a norm anymore. We actually have the Japanese markets up about 1 1/3%. Chinese markets are down 1.6%. We have the Australian markets down 4.7%. We're going to get back to some of the exchanges, but I do want to talk about commodities here real quickly. Crude oil, WTI is relatively flat, $22.65 a barrel. Brent is down about 4.5%, trading at $26.10. Natural gas is back below its February lows, which was an multi-year low. Because remember, it wasn't too long ago, there was a little bit of a bounce back with natural gas hitting that $2 threshold again per million British thermal units, but we have pulled back sharply and are now at $1.71. Gold and silver are relatively muted. At the time of this podcast, we have gold trading at $1,494 an ounce. We have silver at $12.56 an ounce. Again, if you've been listening to the recent podcasts where we are likely setting the stage for inflation, if not hyperinflation, currency wars, trouble in the bond market, etc., 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 how I think, my analysis, what I do, is I believe in precious metals. I believe in gold. I believe in silver. Despite their strong pullback recently, but because it's been an everything sell-off, I still remain steadfast in that these markets, the precious metal space, is in a multi-year bull market. Okay, nothing goes straight up, nothing goes straight down, although the way the stock market's moving, we might have to change that. So pay attention, be diversified, as I like to say, do your own homework. So a little bit more on the stock side of things real quickly before we get to the letter. Because I did see New Zealand was, I think, down almost 10%. We're going to get to them. Let's see. We got South Korea down about 4%. We have Hong Kong down about the same, 3.7%. Again, Australia is down almost 5%. Yeah, New Zealand is down 9%. This is on the back of the Prime Minister coming out and announcing that there's basically a self-imposed, self-isolation quarantine throughout the entire country. So markets didn't like that. New Zealand Stock Exchange is down 9% at the time of this podcast. So it appears it's going to be the typical volatile week that we have seen. And just for a little bit of context, recall a decade ago during the great financial crisis, in the midst of the TARP debate and everything, $700, $800 billion, whatever it was, an emergency stimulus that was needed to cause or to stop all panic, that was voted down. You remember this? The first time, those first votes, it was voted down. Then it was passed in the markets. There was a nice relief rally on the markets. And then what happened? Then the markets continued to sell off. And they continued to sell off until peak to trough was about 50 to 54% decline. So be careful. Don't think that this is going to be the end-all, be-all, that finally bipartisanship has come together in Washington, D.C., and everything's going to be A-okay. We've seen this song and dance before. It doesn't work. Okay? And don't forget, this time, they're doing so with much less ammunition at the federal government level, at the central bank level here with our Federal Reserve, and we have trillions and trillions of dollars more in national debt. So this is not a good recipe, folks. So that's what's likely to transpire through the rest of this week. Volatility, headlines. Will the markets buy into the BS to justify some sort of rally? Perhaps. Again, nothing goes straight up, nothing goes straight down. If there was some sort of bounce this week, I would not be surprised. But if it continues to fall, I'm not going to be surprised either, because I don't believe in any type of efficacy that is going to come from these stimulus measures. And I use the word stimulus very loosely. So that is what it is, and I will do my best throughout this week to keep you posted on those updates. But now to the letter. And again, this will be posted to the website, thecapitalnews.com. When, in the course of human events, it becomes necessary for one people to dissolve the political bonds which have connected them with another, and to assume among the powers of the earth the separate and equal station to which the laws of nature and of nature's God entitle them, a decent respect to the opinions of mankind requires that they should declare the causes which impel them to the separation. That to secure these rights, governments are instituted among men, deriving their just powers from the consent of the governed. That whenever any form of government becomes destructive to these ends, it is the right of the people to alter or to abolish it, and to institute new government, laying its foundation on such principles and organizing its powers in such form as to them shall seem most likely to affect their safety and happiness. These are the words, and just some of the wisdom from our founding fathers that they embedded into our Declaration of Independence. Hopefully, you recognized the above passages. More importantly, I hope that you understand their meaning and their place in the context of history. I say this because we are witnessing an historic global phenomenon, the pandemic of COVID-19, financial and economic collapse, and attempts by central banks and federal governments to expand their ever-increasing reach for power. I have written to you in the past, as well as to the White House, warning of the economic and financial stresses that lie ahead and that which we are in the midst of. These warnings were written well before the onset of COVID-19 and were largely ignored. However, I am now gravely concerned that this pandemic will be used as a convenient excuse among politicians and central bankers to justify actions, which are unjustifiable. While COVID-19 may be of serious concern, it is not the cause of the economic and financial hardship that is surely to ensue. Rather, it has been the generational policies that have been adopted and implemented by our government, the Federal Reserve, and those of other countries the world over. Outrageous and inexcusable deficits and debts occurred well before the onset, of the pandemic. Trillions of dollars worth of unfunded liabilities and broken promises with respect to pensions occurred well before the onset of the pandemic. Cheap and easy money and credit from financial institutions and central banks occurred well before the onset of the pandemic. Seemingly endless wars that have contributed greatly to our financial and societal ruin occurred well before the onset of the pandemic. A merger between some of the largest technology firms and our national security and defense apparatus, which monitors and tracks U.S. citizens and infringes upon our constitutional rights, occurred well before the onset of the pandemic. Deteriorating infrastructure, from roads, bridges, levees, dams, etc., have been in disrepair well before the onset of the pandemic. Over-leveraged corporations, drunk on their unquenchable thirst for easy credit, has led to a record amount of corporate debt, and at levels near 50% of GDP, occurred well before the onset of the pandemic. These same corporations then use this easy credit, in addition to their operational cash flows, to purchase significant quantities of their outstanding shares, share buybacks. This form of financial engineering served the purpose of artificially increasing their share price by making their earnings per share look better than it otherwise would have, had they not engaged in aggressive share buyback programs. As a result, many executives of these companies were paid handsomely due to the, quote, great performance in share price. All of this occurred well before the onset of the pandemic. And in addition, their, quote, impressive share gains have been completely wiped out in a matter of weeks. Now, in light of the pandemic, many of these various companies that squandered their easy credit, their cash flows, and even the reputations of their respective companies now come on bended knee to ask Washington, meaning the U.S. taxpayer, to bail them out. The total sum of which is not likely to be known for some time. However, what is known is that our government, including the President of the United States, appears ready and willing to bail out one industry after the next. The President recently noted that the current situation is not the fault of the airlines, one of the many industries now in distress and seeking aid. While true that the pandemic is not the fault of the airlines, their management or lack thereof of the cash flows and operational plans is their fault and responsibility. Had they not squandered their cash flows and debt on financial engineering, then perhaps they would have the cash on hand to sustain themselves during these uncertain times. Asking the taxpayers to bail them out is ridiculous on its face and should not even be considered. When will these bailouts end? Boeing is lining up for $60 billion, and I suggest you investigate their share buyback program as well. The cruise line industry is lining up. The hotel industry is surely to make the list, as is the restaurant and bar industry, among others. What about the energy sector? We also currently find ourselves in the midst of an oil price war. Well, take a look at the indebtedness of our energy companies, many of which are rated junk, and ask yourself how long they can sustain themselves with their debt loads, operational costs, and commodity prices now at multi-decade lows. Their indebtedness also occurred well before the onset of the pandemic. Expand this further to the consumer household balance sheet, and what are we witnessing? We are seeing delinquencies on auto loans that are surpassing those during the Great Financial Crisis, GFC. Survey after survey indicates that some 40% of the country could not have come up with $400 in the event of an emergency. Furthermore, and in agreement with the previous sentence, a significant portion of the population lives paycheck to paycheck and requires the use of credit cards to make ends meet. And despite record low interest rates, once again, the rates charged on credit cards stand at record highs and are more akin to loan sharks as opposed to some kind of reputable financial firm. All of this, too, occurred well before the onset of the pandemic. In addition, look at the disgrace and mismanagement of federal taxpayer dollars. In the midst of the longest expansion in business cycle history in the United States, somehow our genius representatives thought it prudent to enact a monumental tax cut that went mainly to the benefit of corporations. And this is indicated by the low amount of corporate taxes collected, which, when at these levels, typically indicates the country is in or nearing recession. Now, tax cuts are fine, granted that the other side of the ledger, meaning spending, is also cut. This did not happen, and as such, we now face trillion-dollar deficits. During a time when we are told by our president and many others in our government and business communities that this is the, quote, greatest economy of all time, which is laughable and completely not true. A nation does not incur trillion-dollar deficits in, quote, booming times. Nor would a president ask for emergency monetary policies, such as quantitative easing, lower interest rates, and even negative interest rates, which would surely decimate the banking and financial sectors. Simply look to Japan and Europe as a case study. All this nonsense occurred well before the onset of the pandemic. And now, in the environment in which we find ourselves, likely headed into recession, if not already in one, perhaps even a depression, and our deficit is going to explode. How is this to be paid for? There will not be enough growth, especially during a recession, depression, to pay off these debts. Well, if history is any guide, it will be done through inflation and hyperinflation, ensuring the destruction of capital, guaranteeing the loss of savings, and destroying any salvageable reputation the United States of America has left. In short order, we will have gone from a constitutional republic to a banana republic. And all of this is likely to occur without so much an outcry, let alone a whimper from our representatives. Pelosi, Schumer, McConnell, Trump are nowhere near Washington, Jefferson, Adams, and Franklin. Furthermore, in getting to the real culprit of this insanity rests with the Federal Reserve and other central banks, expanding their balance sheets by trillions of dollars, injecting themselves into markets as buyers and sellers of government debts, providing daily liquidity to markets to the tune of billions, if not trillions of dollars, depending on the day. Negative interest rates, quantitative easing, destroying capital formation and savings, causing reckless and damaging speculation in one market after the next, the formation of malinvestment across the economic and financial spectrum. And now again, only a touch longer than a decade ago, here we are at the abyss, and central banks stand at the ready to bail out the very industries and companies that have led to such ruin. And I assure you, this is only getting started. It is also being mentioned how the Federal Reserve should step into the corporate bond market and buy the very bonds and debt I described above, thus bailing out these corporations and their creditors. As if this was not enough, there is also talk of bailing out the states, which would presumably mean pension plans as well. From free market capitalism to nationalization, from free nation to bailout nation, and from constitutional republic to banana republic. And a side note, free market capitalism has been abandoned in this country for generations, which is one of the main reasons we find ourselves in such utter disrepair. Yet despite all of this, politician after politician and central banker after central banker is going to use the pandemic as an excuse to justify bailout after bailout, reckless stimulus spending, and asinine and fraudulent monetary policy after monetary policy. And who gets to pay for all of this when the dust settles? That's right, the American taxpayer, and with interest. I am an American. I am a citizen of the United States of America. I am a taxpayer. I did not vote or give my consent to any of this fraud, deceit, corruption, mismanagement, and nonsense. So what is my recourse? Where and what is my representation? Did our founders not tell us that it is our duty and obligation as citizens to demand change when our government has failed us? Did President Kennedy not tell us that, quote, those who make peaceful revolution impossible make violent revolution inevitable, end quote? I'm not paying for this out-of-control government and central bank. I'm not bailing out company after company and industry after industry because they squandered their resources. I'm not bailing out students and their debt loads, whom knew well in advance what they were getting themselves into. I have paid mine off, and I will be damned if I am going to stand idly by and allow for any type of student debt forgiveness. For if this comes to pass, I want my money back plus interest. These disastrous policies have led to so much future growth and wealth to have been stolen from my generation, millennial, and that of younger generations, and those even yet to exist. Yet all these generations get to pay the bill. How is this ethical? How is this moral? How is this American? I want you to stand in strong opposition to any bailout for anybody. I want you to challenge the status quo. I want you to call for a full restoration of free market capitalism and that of our Constitution. One would think in the United States of America that this would be an easy request of one's elected officials. Yet, for some reason, something tells me not to hold my breath. But what a pleasant surprise it would be. And saying these things is not enough. You must make them happen. And if you cannot, then resign and allow someone who can and will to take your seats. Allow these companies to restructure. Allow new and better management to take the helm. Allow debtor and creditor the ability to negotiate their terms. Let the markets work. There is no easy solution, but I can assure you that more of the same with respect to fiscal stimulus and monetary policies will not work, and expecting it to work is the definition of insanity. This country and the world need leadership right now, and we need the truth, and we are getting neither. What we are getting are the same policies that have led us to this ruin and destruction of our economic, financial, and social fabric. I pray you have the strength to lead and to tell the truth. As an elected official to the Congress of the United States of America, this is your duty and obligation, so do it. In liberty, Godspeed, Alex Koritis. That is my letter to my senators, to my representative. It is going to be sent to them this evening. It will be posted to thecapitalnews.com. Copy it. Send it to yours. Sign my name to it. Amend it. Make it better. Send me emails. Make comments. Something I forgot. Something I left out. I will gladly write them another one. This is a financial coup d'etat of the United States of America that is underway right now. There was a big one that was underway a decade ago during the great financial crisis, which has led us to where we are today. We were talking about hundreds of billions of dollars a decade ago. Now we're talking about trillions. You understand the problem here, ladies and gentlemen? And who gets to pay for all of this? As I noted, we do. Did you vote for this? Where is your representation? Where is your recourse? It's time to take a stand. This is virtually my preamble to my personal Declaration of Independence from this government. It's disgusting. It sickens me. And I saw this coming. What about the millions of people in this country, let alone the millions, if not billions of people the world over who didn't see this coming at all, that have suffered greatly already financially with no end in sight? calls for fiscal stimulus, monetary policy stimulus, what have you, is not going to work. It's not going to work because you have to understand how all of this is financed. You have to understand how a dollar makes its way through the system. You have to understand how this debt is paid for. That's what I do here at the Kapital News. $2 trillion in fiscal stimulus, when 3 weeks ago we were at all-time highs on the stock market. Who would have thought that possible? It's unbelievable. These are historic times we are in. This does not justify these types of moves. It's not rational. It's an attempt to buy up assets for pennies on the dollar. It is a financial coup d'etat. That is what we are in the midst of. This is a crime beyond crimes. The United States of America, for all intents and purposes, ceases to exist. Our constitutional republic is gone. It's a banana republic. It's nationalization. And the President of the United States himself is fine with that. There is no major outcry, no voice from a Democrat or a Republican saying that all of this is wrong and it should not even happen. Nothing. Nothing. Just a question of who gets to control the loot. That's all. Who gets to control the spoils of taxation? That's what our politicians are squawking about. It's a true travesty. It's a true shame. Generations yet to be, as I noted in my letter, and as I noted in our book, The Cynic's Guide to Investing, published 5 years ago, that generations yet to exist are going to have to pay for this. They had absolutely nothing to do with it. They're not even here. But they're going to have to pay the bill. Again, how is this moral? How is this ethical? How is this American? It's not. Yet this is where we are. So stand up and be counted. Do the best you can. Most of this will be ignored. Most of it will be laughed at. But we have to take a stand sooner or later because they're destroying our purchasing power. They're destroying the societal fabric in this country with no end in sight. And we have not seen anything. This is just the tip of the iceberg, ladies and gentlemen. That's all this is. That's all this is. You know, I've spoken here many times. Global protests, it's not transitory. It's history in the making. I've said it's going to come here soon to a theater near you. It's always a possibility in my mind. Now it's a probability. It's pretty much all but certain that it's going to happen. Not in every corner of this country, but in the larger cities. There will be social unrest. There's almost no ifs, ands, or buts about it anymore in my mind. It's almost a lock, almost a guarantee. I truly hope I'm wrong. But I use history to back up many of my arguments, much of my analysis, which I also explained in the letter. And that same history is guiding my analysis for this type of social upheaval and discord that we're likely to witness in the not-too-distant future. Again, I hope desperately that I am wrong, and I will be pleasantly surprised if I am. But be prepared, because it's likely to happen. But again, that is my letter. Representation in recourse. Send it to your officials. Again, use it as a foundation. Amend it. Send me notes, comments, what you think about it. If you think I should add something else, I'll be glad to send many more letters. If and when they respond to me, I'll do my best to inform this audience as to their remarks. I hope you enjoyed your weekend. This week, I imagine it's going to be another volatile week. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.